The effects from this past year's aggressive rate hike cycle in the US are becoming clearer by the day. Pessimism is growing among Americans about the outlook of their economy, as tracked by the Conference Board Consumer Index, which dropped to a 9-month low in April as fears of a recession become more widespread. The Fed's preferred gauge of price pressures, the core PCE index, was also slightly cooler in March, and then there's Q1's GDP figures. The US economy grew 1.1% in January through to March. That's slightly below the expected 2% mark. Now, all this feeds into the speculation that the Fed may be looking to halt and pivot on rates, just not yet. Markets still has a 25 basis point hike priced in for this week's meeting. Also sitting this week is the Governing Council over in the Eurozone. The bloc also posted its Q1 GDP figures last week, showing an expansion of 0.1% quarter-on-quarter and 1.3% year-on-year. The 20 member states delivered a wide variation in GDP figures, with the largest economy, that being Germany, coming in flat at 0% quarter-on-quarter, following a slight contraction towards the end of last year. Now, we don't see any growth prospects picking up anytime soon, as the ECB is expected to announce a further hike this Thursday as it continues its efforts to stave off inflationary pressures while also playing catch-up to the likes of the Fed and the Bank of England. And speaking of which, inflation continues to squeeze the budgets of Britons. March's retail sales contracted by 0.9% month-on-month and 3.1% year-on-year. And if this trend continues throughout May and June, it will leave the BOE with less scope to hike rates any further. Back in South Africa, inflation seems to be moderating somewhat. In March, PPI slowed to 10.6% year-on-year from 12.2% in April. The country also released its trade balance for March last week, posting a narrowing surplus from 10.7 to 6.9 billion rand, notably due to lower coal exports versus the import of oil at a higher price. Now, exports could be boosted by Chinese economic recovery going forward, but this will also be dependent on the rate of the expected global slowdown. In the past, South Africa's trade surplus has provided somewhat of a fiscal windfall, and should the safety net continue to shrink, it could add to the country's financial crunch. Eskom was again all over the headlines last week. The newly appointed energy minister shared his plans on resolving the energy crisis, which, by the way, won't come to an end anytime soon. Among his suggestions is an extension of part of the country's coal energy fleet. Khosento Ramakgopa also proposed a mega bid window to procure 15,000 megawatts of additional renewable energy. The problem is, similar projects with much smaller capacity have faced several delays in the past, with some being hampered by a lack of capacity on the grid. So, fingers crossed, Minister. On Wednesday, the Eskom board will have its turn to answer questions on the recent corruption allegations when it appears before Parliament's financial watchdog, SCOPA. Meanwhile, Pravin Gordhan, the Minister of Public Enterprises, is spending the week in China to resolve an impasse between Transnet and Chinese rail equipment maker CRRC Iloco. Now, all this started when Transnet cancelled contracts worth around 54 billion rand with 4 suppliers over alleged irregularities, CRRC being one of them. In retaliation, the Chinese company withheld spare parts and maintenance services for the trains it had already delivered by then, which has forced Transnet to withdraw the services of a reported 161 locomotives, operations that are key to the country's ore, coal and manganese export lines. Now, there's not much happening in local data releases this week. Naamsa's vehicle sales for April scheduled for release on Tuesday, with a slight contraction expected. Last month's Absa Manufacturing PMI will also be available from Tuesday, with little change expected in the data, by and large due to load shedding and the slowing global growth. The S&P Global South Africa PMI for April will also be out on Wednesday. Levels are expected to reflect the pessimistic sentiment on the country's outlook. On the international front, it's all about the rates this week. In the US, markets will be analysing 2 sets of employment data, non-farm payrolls and ADP employment change. And in both these cases, we expect a further decline in the number of jobs created in April as the American economy starts to slow down. But the big focus remains on Wednesday's Fed decision, with a 0.25% increase in rates expected. Then on Thursday, the ECB will announce its rate decision, with all indications being a further 25 basis point hike as inflationary pressures remain sticky. As for the currency, it had a tough April. It was the 3rd month this year that the rand weakened against global currencies. The rand depreciated some 2.7% against the US dollar and 4.5% against the euro and the British pound. Now, this poor performance stems from the tight global monetary conditions, as well as South Africa's unattractive risk profile. And this mixture is likely to remain in place as we head into May. But that being said, the ZAR is undervalued against the majors, so a rebound is still on the cards later this year once the global rate hike cycle tops out. So keep an eye on this week's rate decisions because they do hold the potential of kickstarting the Rand's long-awaited recovery. That then the week that was and the one to come for the markets.